have two veterans in the solar industry here with us today.
The company will pay you if the system does not perform.
Scam. An amazing sales tactic that these guys have come up with. With a lease or PPA, at best, all you can do is lower your cost. When you purchase, you actually are making an investment.
There's two ways to get solar. You can either take out $30,000-$40,000 loan, go into debt just to save a couple $100 on your power bill, or you can kind of do what you're already doing and switch to solar as a service and let the solar provider replace your utility in a sense and be your primary electric provider.
All right, welcome to today's episode where we deep dive into one of the hottest debates in the solar industry. Should you own your solar panels or go with a lease power purchase agreement? It's known as TPO, third party owned. Whether you're an energy consultant, a homeowner looking to save, an investor curious on impact on property value, or wanting to help the planet, this episode is going to be jam-packed. We're going to take the gloves off today, so it's going to be very exciting. Get ready for a discussion that will empower you with everything you need to know about ownership versus lease. At the end of the day, please do your own research and get quotes.
All right, well, let's get into it.
I was just going to say, hit us with the first topic we're going to talk about.
Okay, let's talk PPA versus lease. Just give us your 30 to 60 second elevator pitch on why PPA, why lease.
Yeah, so my kind of intro to homeowners is, look, there's two ways to get solar. You can either take out $30,000-$40,000 loan, go into debt just to save a couple $100 on your power bill, or you can kind of do what you're already doing and switch to solar as a service and let the solar provider replace your utility in a sense and be your primary electric provider. And I find that most homeowners want to participate in the savings but don't want to take on the risk. And so that's one of my biggest arguments for why people should look at TPO. It reduces the barrier to entry to go solar.
Got it. I love that. And what about you, Julian? 30 to 60 second elevator pitch.
I'm going to try to condense this. Obviously, we have a long time that we're going to talk about all the different topics, but I think that my problem with PPAs and leases isn't the product itself. My issue with PPAs and leases is more how it is sold and how the salespeople misrepresent what it is and how the dollar amounts are not really spoken about. And so, personally speaking, I think that both are good options, but for the majority of people, ownership ends up being better in the long run. And so, obviously, we're going to talk about all of the reasons why, but in general, I feel like for the majority of people, ownership is better. And unfortunately, many that end up going with leases or PPAs were not given the proper full explanation, which is why they did a lease or PPA in the first place. I do agree with you, though, that it lowered the barrier of entry, which is why it even exists, because financing for solar didn't exist 20 years ago. Banks weren't on board. And so the only way to get solar without forking $50,000, $60,000, $70,000 at least out of pocket was Sunrun's solution. Was it Sunrun or Solar City that kind of invented they were first to market with the residential?
Solar City really pioneered it 2006, 2010 with the leasing PPA, and Sunrun quickly followed after too.
And I think they had about 3 to 5 years basically where they weren't competing with banks. So I think that PPAs and leases were an amazing jumpstart to the industry getting started in the early 2000s. I just believe that for most people, it is an obsolete product that is still being pushed mostly for the salesperson's benefit.
For sure. And I've liked how I've seen it go back and forth with popularity. And we've seen that where it's more purchase and then more TPO heavy. So that's been interesting to see too. So now that you've given us your elevator pitches, what about your 30 to 60 second reason on why not the opposite product? So let's start with you.
Yeah, so like I mentioned earlier, the barrier to entry, I think, is still pretty high. Maybe the argument could have been made a couple years ago when money was close to free and you could get a 1%, 2%, 3% loan with very low dealer fees. There was a good argument for that, right? And obviously, I even tell my homeowners the long-term cost to owning your system is less, point blank. TPO is more expensive. If the company's going to take on more risk and more liability potentially, then of course it's going to be a more expensive product. But the point is what's your exit strategy, right? And the truth of the matter is one of my biggest pet peeves in solar is when I hear people who sell ownership say things like, oh, well, this is going to increase the value of your home. Look at this study. They all reference the same study. They always talk about, you're going to recoup this cost. And that's just not been my experience. I work with a lot of real estate professionals, and oftentimes it's actually the exact opposite of what the solar sales rep told them. And they actually end up eating into their equity to pay off that solar loan or that lease or whatever that particular term was. And so, it's actually maybe a benefit to the next buyer. Great. They get free electricity on the next buyer, but the actual original person who made the investment took the hit, took the risk. And that's one of my biggest arguments for why to maybe consider not buying your solar.
Jonathan, this
Great
is you.
points. Great points. And I know, Julian, you already touched on a few reasons why PPA lease is maybe not your favorite, or some people get misled. But if you want to expand a little bit on why you lean into purchase, and what are a few of those bullet points you say to someone when they're looking into solar?
I think that obviously it's cheaper to own your system, and it's not just cheaper up front, and it is about the exit. I think that basically Jonathan hit the nail on the head when he said it's about your exit strategy. And I think that the underlying belief about if it is ultimately valuable or not is the deciding factor of if you like to guide someone towards a purchase or a lease. Because if you full-heartedly believe that that solar system and project has a dollar amount associated with it, that at least in the studies I've seen, the market, consumers do value paid off solar, because if you have two houses and one has solar paid off and the other one doesn't have any solar, living in the house with the solar is less, right? By however many hundreds of dollars per month. So I think that at the end of the day, if you truly don't believe solar adds any value to your house, and you do think that, hey, if we spend $30,000 on this system and then the house value doesn't go up $1 and we're going to move in 2 years, then if that was the case, then I 100% would be in agreement that leasing is better, because you only have to pay for 2 years of your service, and then you can just kind of transfer the 23 remaining years. The problem is that I just personally do not see reality shaking out as simply as the explanation of it's a service and we're just a new service provider for you that's lessening your cost. I think that the 25-year agreement has a lot of hidden clauses that people oftentimes don't realize until after. And obviously it's too late. So I think as the discussion evolves, we'll kind of more get into a lot of those scenarios. But ultimately, I feel that buying the system, while yes, it can upfront cost more money, in my experience, I've seen more scenarios where the homeowner leaves their house with more money even when they sell the house early. So I guess getting into that.
Let me respond to that a little bit. I agree actually a lot on that. I think part of it too is, up until the past handful of years, a lot of these lease PPA providers did not have some of the protections that they've evolved to. So as an example, whenever they used to file a UCC1 lien fixture against the property, they would do it as a form of debt. So the remaining lease payments for 20 some odd years would be added up and shown to the buyer. So the buyer's now looking at $30,000 in remaining lease payments on this system that they didn't agree to,
or 120,000,
or 100,000. Yeah, crazy numbers, especially with some of the top providers who inflate their pricing, which we can get into. But yeah, and then that actually causes, like you said, a bigger deficit than if they would have just financed the system and it was $30,000, $40,000 instead of this much larger debt that's being carried. Now, lease PPA providers in the recent past have gotten a lot more savvy to this, and they actually have specific clauses in the agreements that say things like the UCC1 filing fixture is just a public notice of ownership of the equipment. So it's an equipment lien rather than actually a debt that's owed. And so I think that was a smart move on the industry part, just to protect homeowners and really push in that solar as a service direction. And again, lower that barrier to entry, because I would say that's the number one reason I get people on the lease PPA side who are reluctant to still move forward. And I think a lot of my sales teams who maybe come from an ownership background, this is one of the things I have to kind of re-educate them on is, okay, that's true. That was true in the past. And so we have to educate the market and our sales teams that, they actually don't file that, debt against the property in the same way that they used to. It's just an equipment lien. So that's a kind of a recent thing I wanted to add there.
And there used to be hero pace tax lien programs that were ownership that took first position that were pretty bad as well. And so it just really tells me the homeowner needs to do your due diligence on the UCC1 fixture filing, and that could be with a lease third-party owned, or it can be with a loan. So make sure to ask that question.
Really important here, since you brought up education, what we find is that a lot of real estate agents and lenders don't really know how the UCC1 fixture filing works. They are not all as educated on how that transfer works as well. So to your point too, making sure that we educate on that is super important, because a lot of it is really just disconnect, right? So let's get in a little bit more to the cost benefit analysis. We can even jump into transferability since we're on that.
I wanted to hit on something though that Jonathan just spoke about, which is the way that a lot of times the salespeople frame the conversation when they're doing a lease or PPA is, this is a service. And I think that it's a misrepresentation of what the homeowner is signing for, because really what the homeowner is signing for is, like for a PPA, for example, it's a power purchase agreement. What you're agreeing to is a 25-year service agreement, which you have to purchase all of the power that system is going to produce, right, in a 25-year period. What they do, right, is they do not ever really explain what you said earlier, which is, when you're going to sell the house, the person buying the house, they get a sum of all of the remaining costs on that UCC1 filing or that lease, right? That total amount is hardly ever brought up during the sale. When the salesperson is at the kitchen table, they are trained, like Sunrun, they are trained to not talk about the total cost. And whenever the homeowner asks, well, what's the total cost of this? They're trained to divert the conversation and say, this is just 14 cents a month or something like that, and bring it down to a more palatable dollar amount or concept that they are not as fearful of. The problem is that, call it a lien, call it a UCC1 filing, call it debt. It's money that it's not the house that owes it. It's the person that owns the house has to purchase or pay that bill. So I don't like how now, especially now, like Sunrun's new ad is like, hey, this is a subscription model. Well, normal subscriptions you can just cancel at any time. When Tesla came out with their solar subscription, you could cancel at any time. Sunrun is now using that same verbiage for 25-year agreements, which the only way to truly get out of is, if you sell your house, is to convince the next buyer to take over the rest of the payments.
I think that Julian's making a really, really good point that homeowners out there should consider, sales reps out there should consider, that some of the wording and lingo can be misleading, even if it's not intended to be misleading. Using words like subscription and not pointing out like the total cost and those kind of things are really important. Like you have companies saying free installation, right? It's not necessarily free. It's just most companies are doing no money up front and zero down option.
Yeah, the misrepresentation in solar, I mean, these solar marketing agencies that pop up everywhere and try to sell us solar professionals leads is really one of the biggest kind of problems with our industry, because they learn how to use, Google ads or YouTube ads or whatever it is, and they think that they can start up an agency and start running advertisements for things like free solar, which is the biggest, in my opinion, one of the biggest impediments to the growth of solar is the trust factor. People don't trust solar as an industry because of these marketers who are trying to make a quick buck off of misleading homeowners into thinking there's free solar. I get called by literally professionals all the time, realtors, referral partners, and they say, hey, Jonathan, you've been maybe working with me for a year, 2 years, however long. And they go, I got this thing on my door, or I saw this ad for free solar. What is that about? And even if they've been working with me and I've educated them and said there is no such thing as free solar, it's not a thing. There is one program in California specifically that they don't advertise. You have to find them, because if they're spending advertising dollars, that should be your sign it's not free, right? And so I get really passionate about that with every homeowner, and I tell them that partially just to retain the sale in the house and say, hey, I don't want them to, get distracted. So I tell them every single time in-house, hey, if you see any advertisements for free solar, we're talking about solar right now. All of our devices are listening, ha ha ha. So now you're going to start getting ads run to you regularly. And I agree. And I think to your point, Julian, I agree with a lot of the stuff that you said, that they're educated or trained, these salespeople, to not give the right information, or just to bring it back to the cents per kilowatt hour or the monthly payment. And it's very misleading. And then one other point, I think you said earlier about the debt, and I think we'll get into this later, so I don't want to get too deep into the debt, but this is a big factor. I tell my homeowners is, look, if you're going to own the system and take out a loan, that affects your personal DTI, your debt to income ratio, versus a lease PPA does not. The solar company is floating the debt. Now, to your point, there's still a contractual agreement that needs to be fulfilled, and generally they are more expensive than ownership.
Yeah, great points. And in the news recently, there's some companies getting in trouble because their sales reps selling a 25, 30-year loan to a grandma in Texas and Nevada and things like that. So you got to be very careful. I'd like to touch on monthly savings and tax incentives and credits. So from your side, if you can speak to the actual monthly saving, because we know a lot of people in the country are looking to try to save some bucks right now. But then there's also the counter argument of tax credits. And so if you could speak to why your solution is better for those two.
So again, a couple of years ago, when the cost of money was cheap, it was harder to make an argument for monthly savings because the monthly payments were very comparable on a lease PPA versus ownership. Now in this current climate with higher interest rates, higher dealer fees, these rate buy downs, we're seeing monthly payments that are typically significantly higher than a lease PPA. And so on the front end savings, usually you're seeing a quicker, more immediate ROI. And, unfortunately, I found that people usually make decisions based upon immediate pain and reactionary things. And again, if everyone was thinking long term, then maybe you can make an argument to own the system, but people want the immediate savings. And so for that reason, a lot of lease PPAs are sold with an escalator. They have a 2, 3, 3.5%, 4% escalator attached, which states that the rate per kilowatt hour goes up. And this is what makes it both appealing and simultaneously the most expensive product. If you look at these escalators, the monthly payment usually doubles or even more in the 20-25 year term. So, you start off with this great savings, and then the argument is, well, if you compare that 2, 3, 4% escalator versus the escalation of the utility companies, I've been doing, lease PPA since 2018. Every single one of my homeowners is saving more money today than when I signed them up. And that's because the utilities never go up by 3% a year. They have to keep up with inflation, pay the linemen, all the hard costs that go into maintaining this outdated, power grid infrastructure. We can even get into some of that maybe later, but a lot of people talk about other solutions. Oh, we need nuclear, we need this. The point of the matter is that decentralized power is the future. Creating your own power is the future. Tapping into this old kind of central power grid is going away. So on the tax credit side, real quick to touch on that, obviously with ownership, the homeowner takes the tax credit. Now with some of the new policies that went into effect this year from the Inflation Reduction Act, which was signed into law in September 2022, we're actually seeing an additional 10% federal tax credit for domestically made products, which is amazing for our industry. It's going to actually bolster the growth, and a lot of these third-party owned companies are taking that extra 10%, and eventually I think that'll trickle down to ownership where we'll be able to get 40% and put that in contract and get that back for the homeowner. So it's really simple. If you own it, they get the tax credit. One other thing on the tax credit, and then I promise I'll turn it over. So a lot of times reps misrepresent the tax credits. This is probably my second biggest pet peeve, right?
We can get into this more.
Yeah, so real quick on that, the tax credits, there's two main types of tax credits. There's refundable tax credits and non-refundable tax credits. Solar is a non-refundable tax credit, which is just like it sounds. The federal government will not refund you the money. It only offsets existing tax debt or liability. So if you're a person who's a W-2 employee, There's strategies where you can change your withholdings, take home more every paycheck, accrue a federal tax debt, and then apply that to the loan, right? That's how they kind of coach. But a lot of times, people who sell ownership don't educate on that properly. What they do is they make it sound like, oh yeah, you just take that 30% off the top and roll it into the loan and we'll keep your
Fund.
You get a refund.
It's not a refund though, it's a credit.
And then what happens is, so there's a lot of arguments on both sides why TPO or ownership providers mislead the consumer, but the tax credit, in my opinion, is the number one thing that people who sell ownership mislead homeowners on.
Have you known clients to maybe not get the full tax credit in year one, or maybe not have the tax appetite?
Exactly, and that's what happens. And so if you're a 1099, you're a business owner type, probably you'll be able to get all of it in year one. However, the tax credit does roll over for up to 5 years, so there's that argument as well. But the bottom line is, it's not a refund. It's actually money you have to put aside in a separate account and hold on to and pay it against the loan to re-amortize and keep that monthly payment lower, right? So anyways, that's my thoughts.
Great points, and we are not tax professionals, so please consult your CPA
Yeah.
for more information.
And a couple highlights from what you said that I wanted to bring forward. First, I completely agree. Having an escalator is not a bad thing. We do see that escalators, even as high as 2.9, 3.5, are going to be less in a lot of the high price markets like California and Florida and a lot of the utilities across the US. So I wanted to highlight that part, that escalators are not a bad thing. And fixed 0% escalators are also great as well. So it just depends on the client. And just to take it back on the tax credit before we hand it over to Julian, is we are not tax advisors, as Jonathan said. And if you are a homeowner looking at this and you're wondering, what is my tax credit going to be? The right answer is to speak to your CPA and your accountant and get individual advice for your taxes. So Julian, what is your take? Cost-benefit analysis, and then
Monthly savings and
monthly
tax
savings
credit.
and tax credit.
Right. So here's my perspective on the payment. By the way, yes, if you put your PPA on an escalator, what you're doing is basically, I call it backloading the majority of the cost. And so what I mean by that is, if you have like let's say a 2.9% escalator, your payment is going to basically exactly double. I have an Excel spreadsheet I made. If your payment starts at 200, it's going to end at 357. So $3 shy of doubling, right? So the way I see that is, okay, when you're looking at the payment, right? It's not really a $200 payment that you're giving them. Really, it's an average of like a $300 payment, right? Because, it's going to go up and then it's going to be over 300 for half the time. But basically, the reason why you get that escalator is because if you were to put that PPA on a 0% escalator, which you can totally do and just have a flat payment similar to financing it, the payment usually doesn't come out to really be that much less than financing. They're showing you the escalator because they want you to see, oh, look at this first year savings. Look at the difference. You're saving $150 right now versus, oh, like you're probably not even going to get that tax credit, and this is going to be your higher payment through financing. And so basically, they're always, most salespeople, right? The problem is not that one has an escalator and one is flat. That's not the problem, but not seeing the full 25-year chart and being pushed into that based on fear-mongering sales tactics, which is like, hey, you're not going to probably get the tax credit, or you're going to have to, get it over several years and you're going to have this higher payment during this full time. I just feel like, and like we all said, the best thing to do is talk to your CPA. The problem is that if you've knocked on someone's door and you're pitching them a lease, you've been trained to close right now. There is no leaving that kitchen table until you get a definite yes or they're kicking you out. That's the game. And so what a PPA or lease salesperson is not going to do is say, hey, let's pause this whole thing. You should have a meeting with your CPA so you can make a dialed in, careful, thought out decision that's calculated instead of feeling the pressure to say yes to me right now in the moment, because statistically, once that guy leaves the kitchen table, he's not getting invited back and the sale is dead. And so right in there, the whole sales structure isn't set up to survive unless they're forced into the sale quickly before they can make that calculated decision.
It almost sounds like you're implying that lease PPA might have a higher cancellation rate than ownership sales.
Well, yeah. So let's talk about how the businesses work, which mostly sell PPAs and mostly do lease purchases. Most of the companies that sell leases and PPAs are sales organizations that are not contractors. They have B2B agreements with installation companies. We call them contractors, EPCs. There's several different terms for it. But essentially, that sales machine is going to sell the product in which they can survive. And you cannot survive in this industry by carefully giving every single person 2 or 3 hours of your time, telling them to go talk to their CPA or their accountant and get calculated tax advice if you are not going to make ridiculous money in the end. Because if you're going to go to all of that effort, right? I'm a little bit like I didn't explain that correctly, but what I'm getting at is this is such a difficult industry as a salesperson to actually succeed in. I think like the statistic is like it's like less than 10% that get in end up succeeding. And so my point is that it's so difficult to actually make a sale that the last thing that any salesperson is going to be trained to do in the beginning is to create their own hurdles in the sales process. And so unfortunately, that's the reality of where we are and how this product is sold. Is most of the time it's a quick force sale.
It's true, yeah.
And the companies that are more sitting back waiting for customers to come to them, they're usually the customers that have taken more time to research, and those are usually the companies that are offering purchases. It's usually the difference is usually, did you approach the company or did the company approach you? And that tends to be most of the time, like it's a pretty good say of, are you getting pitched a lease or a purchase?
And to your point, just to jump in on that, yeah, most of these larger companies who are sales organizations, they do push the lease PPA for a number of those reasons you mentioned. They can get a higher margin, they can get, faster money. There's reasons why. And then you find that a lot of the smaller companies are generally lean heavier towards purchase. And I always tell my homeowners there's two types of solar companies in the industry, ones that have terrible customer service and the ones that are bankrupt. Those are the two types of companies that exist. Unfortunately, in our space, only a couple of companies who have good customer service ever survive, because the amount of time, energy, resources that go into properly servicing these customers just isn't sustainable.
100%.
So they just change their solar org, name, they rebrand it, they, amp up their sales force to go back out there and just sell under a new facade, but it's the same exact wash, rinse, and repeat cycle. And that's why we see, hundreds of companies going bankrupt this past 12 months. We see companies, changing their entire profit structure and how much they're retaining to keep to service these systems. Because even these big companies, I mean, we can get into reviews a little bit, but if you go online, any of the big companies, I hear people say, oh, well, I researched this small company and they've got great reviews. And I'm like, yeah, because they've got 1,000 customers or less, right? Or if you look at a big company like a Sunrun that has over 1 million customers, they've got like 3,000 or 4,000 one-star horror stories online, but that's because of the scale and the size of the company partially. So there's kind of pluses and minuses to both. I always say, you can go on to whateveriwantobelieve.com and plug in whatever you want to believe and just, validate the story that you have in your head about solar and why, it's evil that people make a higher commission and some people make less. But one more point on the commission side is that, generally speaking, if you're just selling a price per kilowatt hour, that's more ambiguous and harder to shop against. And there's less providers that do that. There's a ton of these, again, smaller companies who will sell you solar and you can do a thoughtful analysis, but you're right, it's not good for business to tell somebody, oh, let's think about it, right? That's the number one objection in any sales organization is let me think about it. And, personally, as I'm training salespeople, that's what I'm telling them to not do. How do we remove barriers to entry, assume the sale, push past any objections, get the deal at the kitchen table? Because statistically, you're right. If we leave that house and there's not a signed contract, they're going to start ghosting you, not calling you back. You're chasing people down. You're wasting your time, and you're going to be out of business really quickly. So that's just the nature of the beast.
Yeah. Unfortunately, a lot of these contractors, they've been like, to go back to what you were saying about them going bankrupt, right? Like when you're dealing with a sales organization and an EPC or a contractor, that sales organization has probably been pressuring the wholesale price from the contractor to come down. Yet the salespeople, they're not responsible for anything. Like your workmanship, liability or warranty or whatever. Like the salesperson sitting here trying to say, oh, it's 25 years, but at the end of the day, right? Like that salesperson doesn't have to answer the phone. They're saying no, that contractor is going to be responsible for it. And so over the several years of business, clashing it out, basically, that's exactly what happened is all these contractors put themselves out of business because they didn't price in their service cost.
Right.
And now there's no money in it for them to come back. And half the time, the consumers are accidentally shooting themselves in the foot by trying to race to the bottom and just pick the cheapest guy. Because if you always just pick the cheapest construction person, then you have to ask yourself, well, why are they the cheapest? It's because at the end of the day, they're pricing themselves into bankruptcy slowly, and that has what happened to about 60% of the contractors in California last year.
So many good points that you brought up, and I want to highlight a couple of things. First of all, if you are shopping for the cheapest, right, in solar, that's not generally a good way to shop. If you're a consumer, you should be looking for some red flags there. I mean, we're all ordering from the same manufacturers, right? I did want to bring it back to a lot of the sales industry, as you mentioned, is trained to sign up a customer at the first meeting, and that's why you might not get the time that you need to consult with your tax advisor and do those things. Now, if you're meeting with a consultant, you should have an idea by the end of the meeting which way you want to lean, whether that be purchase or lease or PPA. But if you are not, and you're one of those homeowners that needs more advice on, is the tax credit going to work for me or not, I would disagree with you that there aren't a lot of people that are allowing them and giving them that time, because I know that there are people that aren't really signing people up on the first meeting anymore. They are like 2-call closes now. They are giving people the time to go and talk to their CPAs and consider that, because
that's not by choice though. That's because the market's gotten tougher, and so they can't get away with the 1-call close as easily.
Yeah, that also, I completely agree with that. It is harder to sell now than it was before, and I think we've all seen that as top sellers, that people are needing that extra time to go and confirm here and there.
And I think it's a great time to remind everyone to comment below which one you like to sell, and make sure you can actually sell both, right? Like some companies don't even let their guys sell purchase, or they artificially inflate it. So as professionals, some of you license in your states, and with new compliance regulations coming, just make sure that your company is giving you training on all these topics, or of course reach out to work with us. But make sure to comment below, because we'd love to hear what you're selling and what you like to sell. And that kind of takes us into our next topic we're touching on already.
Warranty differences. So yeah, let's talk about TPO products versus purchase. Let's talk about warranty differences and what we're seeing in the industry. We'll start with you, Jonathan.
Cool. Yeah. So I already touched on it a little bit. The two types of companies, ones with terrible customer service and the ones that are bankrupt. So the warranty is only as good as the financial strength of the contractor, right? That's obvious. And again, to our points earlier, just racing to the bottom, or working with a sales organization that has kind of beat up the installer to get the wholesale level pricing. Like you said, Julian, that's 100% true. And, these installers feel like they have to be competitive or they'll lose their sales org, and that's their fuel source. So they feel like they have to then, lower their pricing, and as a result, ultimately lowering the standards and the ability that they have to pour back into their own install organization and keep it sustainable and be able to have, money for service in the future. And what happens is, the debt and the backlog of customer service issues grows and grows and grows until it swallows all the front end cash flow revenue for the company, and they go under. And it happens all the time in solar. And so what we have to do is, because I sold Sunrun Vivint for the past 6 years or so, up until about the beginning of this year. And, they were one of the most expensive. And the argument was, yeah, they're one of the more expensive options out there. But because of that, we have a larger margin. And if you look at all of the large publicly traded solar companies, they're the only one that I'm aware of that actually show a sustainable profit, and they actually have, cash flow that's healthy enough to sustain into the future. So what's happening is a lot of these other TPO providers, big banks, finance companies, getting in thinking that they can just make some fast money on these kind of, inflated contracts that look bigger and have more meat on the bone than maybe like an ownership option. They just see the dollar signs from a banking perspective. They don't actually see all of the service and work that goes into maintaining those agreements. So specifically, most of the time I tell my homeowners, whether you're buying or doing third-party ownership, the warranties from the manufacturers ultimately usually the same, right? The workmanship warranties, they'll put the same. Even if the company isn't going to be around a long time, anybody can put on a piece of paper 25-year warranty, right? They don't have to back that up necessarily. They can put it in writing, and there's no, you don't know. And if you're a consumer, and especially if it's a private company, you have no idea what the financials are of that company, right? And so that's another argument. Again, I've sold a lot of these big box providers. It's, hey, we have public information. You can look at this. You can see what their financials are. And that's one of the hard parts, is that a lot of these small companies that people are going with, again, for the savings and the price point, those warranties will be gone. And, again, maybe it's fear mongering, right? To your point, Julian, but it is a strategy, and it's not just a strategy. It's something that I've witnessed and experienced. I would say, I don't know if the exact stats, but roughly 50% of those 5 million solar customers have been abandoned by their original install partner. So, that's a couple million people with solar that if there's an issue, they have to now pay out of pocket. They have to, hire an electrician or whoever to come out, or a roofer to fix leaks, things of that nature. And those costs can add up. So with that said, most TPO providers offer a standard, 10-year roof leak guarantee, and then a 25-year warranty on everything else. So it's pretty comparable. There are some companies who have 30-year warranty extensions or third-party insurance policies where you can kind of get that extra umbrella coverage if there are any issues or your installer goes out of business. I always say if you're going to buy solar, it's good to look at that as another option, because the installer, you don't want to just rely on their warranties. So that's my take on that.
Awesome. Yeah, very good points made. And I think the big highlight I have from what you said is the warranty is really only as good as the strength of the company. And we have seen really good companies go out of business. So it can be hard, but P&L, financials, those are all public facing, and it's worth it as a client to do some research ahead of time and look into that. So Julian, what's your take on it? Warranties.
Yeah, so it's a gamble if the company is going to be around or not. That's a problem that, as you described, probably half the nation's homeowners that have gone solar probably have what we call orphan systems, right? Where they don't have a contractor that they can call. So it's a big problem, right? Personally speaking, I like to have the conversation with my clients about what are the lesser of two evils, right? With Sunrun, right, or a PPA or lease, there, you have that service agreement built into the deal. In reality, it could take 6 months or a year to actually get an inverter replaced. Unfortunately, I hope that changes. I hope that these lease companies can begin to give their service, quicker and do the replacements. So yeah, in theory, I do agree that on paper, the lease feels safer. The problem is that, like I said, it's about comparing the lesser of two evils. Let's say the system that the purchase price is $40,000, the tax credit's going to bring it down to 28 net. That same PPA in total over 25 years, let's call it $100,000 worth of payments. I'd rather give an electrician $1,000 to replace my inverter one time versus have been signed up for $100,000 PPA where, thank God, they're going to replace my inverter for free. Well, it's baked into your $100,000 worth of payments over the next 25 years. So obviously that's the cash price versus the total of payments. So let's say if you finance it, it's $75,000, over the course of the long run if you never pay it off or something like that. But the point is that I feel like, once again, this is a way that it goes back to when they're talking about the service too. There is no service or maintenance, right? There is only warranty claims because something is broken. This isn't, a device that needs to be maintained once a year with cleanings or something. Sunrun is never going to come out and clean your panels for you, right? They may claim they're going to keep the production at a certain amount, but And that's actually something I'd love to talk about next is the production guarantee, which is also a scam. But
Production monitoring guarantees and batteries are the next two topics. So
Perfect.
yeah, let's get into it.
I'm going to explain that in a minute. But overall, yes, I think on paper, the PPA gives you more protection. It's more of a gamble when you purchase your system. But obviously, with the tens of thousands of dollars in savings, I'm sure you can, it won't hurt that much to hire an electrician in the short term to do a manual swap for you or something for a part, not in warranty.
Fair.
Points made. And one thing that I want to highlight about what you said for homeowners out there that might be shopping and looking for a home for their solar is to ask what that company's turnaround time is, right? Because turnaround times for repair are different for every single company. We've seen that. We've seen very big companies that we've worked for, Solar City, Tesla, taking months. I mean, that's part of the reason why we left those companies to come to companies that have a better response time. So asking them, what is your turnaround time? When things are not working, how fast can you get out there? Is that in writing? What's the guarantee there? What is the method of reaching out? So those are all very good points.
And whatever the sales rep says, 3x it, and then you have a more accurate idea.
It depends on the season too, right? Because in solar, it's not always going to be uniform, but that rep can probably tell you what the current average time is. Is it a week, or are we talking?
This goes back into the problem with these jobs being sold without really any money being set aside for future service. Because the problem is, as a business, you are trying to fill your day with money making business activities. If it goes back to what you said, like there's two types of companies, bad customer service and those that are bankrupt. And it's because a lot of those bankrupt companies spent all their time fixing the systems that were, on their customers' behalf, which obviously is needing to be done. But if you spend all of your time doing that and not selling and installing new jobs, then you're not going to be around the next time that person's system breaks to fix it a second time.
That's why companies like Tesla have had to increase their prices over and over and over and back out of markets because they didn't have enough money on the table to service and give customer service, in my opinion.
And one last thing before we move on is manufacturer's warranties, right? If you're a client and you're shopping, not only do you have the company warranty, but you do have manufacturer's warranty from the equipment, so we can get into that.
Yeah, and one thing I want to call out too before we move into monitoring and batteries, insurance. So if you're getting solar on your home and you're purchasing, most people would say you would want to contact your home insurance provider. You could talk about fire, earthquake, theft, act of God, things like that. One of the benefits for the leasing TPO side, most people would say, is that company does have some insurance that comes with it. So I just wanted to throw that one out there as well. See what you guys think about the insurance piece.
Yeah.
I've never had anyone call me and say that their home insurance increased any substantial amount of money after adding a solar system to their policy. Ever.
Not substantial, but it does increase. It is extra to add your panels. To most homeowners insurance carriers are going to ask for the amount of panels. It should be added on the day of installation. You should call your homeowner's insurance and said, hey, I bought a solar system, I got 20 panels, and they will charge based on per panel. It's not a lot. I mean, I think for mine a couple years ago in California, $20 for the whole year.
Yeah.
It really depends on the market.
Sometimes there's a buffer for it. Sometimes it's $200-300 annually, but it's a fair question to ask your home insurance provider.
Yeah, and like obviously markets like Florida require $1 million umbrella policy, so that's pretty rare. The rest of the country doesn't really have any substantial impact on insurance unless you're in Florida. If you're selling in Florida, we need to fight against that and change that policy. But
yeah, it's been rough.
And before we move on, let's talk about why someone would need homeowners insurance, because I think that that's confusing for some clients. Like, why would they need insurance if they have solar warranties? Can you talk about what homeowners insurance covers versus?
Yeah, so let me speak to Florida for just a quick second. My understanding
I just had a Florida experience too.
Yeah, let me speak to Florida. So my understanding is the reason why the utility companies lobbied for it in Florida, besides just making it more difficult and for them to lose customers to solar, was that the homeowner's insurance is actually intended to cover the utility side if there were any back surges of electricity or any damage to the utility equipment, and they put that liability on the homeowner. That's my understanding of why they did that in Florida, or the justification for why that passed. But yeah, homeowner's insurance, if let's say a panel were to get ripped off from winds or some sort of a thing and damage, property, then that's really the main purpose for that.
Yeah, like the manufacturer warranties is if their product has a defect. Obviously, if a hurricane rolls through and rips it off your roof, that's not a defect of the manufacturer. And it's also not the fault of the contractor. It wouldn't fall under the workmanship warranty either, because it can be installed correctly and get ripped off by a 150-mile-an-hour gust of wind, right? So that's where the home insurance comes in. They're going to hopefully pay for the fix of everything, get your system back up and running.
Yeah, or if you're in California, fires, right? That's one thing that's not covered by a solar warranty. So additional reasons why you'd want to cover it on a purchase, cover your solar system. Let's move on to equipment.
Yeah, production guarantees are often something said with lease PPAs, that the company will pay you if the system does not perform.
Scam.
So let's touch on that, and then we want to touch on batteries, which likely is a big future of solar as well. But production guarantees, Julian?
Yeah.
Production guarantees, in my opinion, are great in theory. There's nothing wrong with the idea. Is fantastic, right? Obviously, it gives you the peace of mind. Hey, if this system doesn't produce, you're signing up for a service, not buying products. So, if the products don't work, it's on you. But if you're signing up for a service and the service doesn't deliver, that's on us. An amazing sales tactic that these guys have come up with, right? Because in reality, when you get into the small print, how this refund actually works, the way that it really works is, well, there's a few things going on here. So the first thing is that when Sunrun produces proposals, or any of the big lease PPA companies, they will water down your production estimate, right? So let's say the system is supposed to produce 10,000 kilowatt hours. They're going to say, great news, Mr. Mrs. Homeowner, your system's going to produce 9,000 kilowatt hours. So right off the bat, what they've done is already given themselves a 1,000 kilowatt hour buffer. In a way, you could think this is great because the system's maybe going to produce a little more than it's supposed to. But what they're doing right here is sheltering themselves against being in the red. So first layer of their protection, right? Give themselves a whatever 5, 10, 15% buffer in production. The second thing they do is, most of the time in the contract, every single contract has to be read through, because I've seen anywhere from, we actually do guarantee 100% of what we're claiming, and I've read down to, we are only actually guaranteeing 85% of what the stated value is. So the most common one I see is like about 90%. I would say that's the most common one. So like I said, basically they're saying the system's supposed to produce 10, it's supposed to produce 9. It's really going to produce 10, but really they're going to guarantee, we'll call it 7,700 or something like that, right? And so that's the first thing. When you really look at the fine print and you do the math, you realize that guaranteed production is so much lower than what really you're thinking is guaranteed. Then on top of it, you'll learn about the schedule and how they do it. So it's based off usually a 12-month or a 24-month period, and it's based on averages. So if your system overproduces, let's say 10 months, and then your inverter dies, but you're already at the 9,000 kilowatt hour mark, 2 more months would have gotten you to 10, but because you're already at 9, those two extra months, you've already met your required service amount. So even though your inverter is broken, you're not going to ever be paid back the difference, right? And then on top of it, they don't cover your bill, right? They'll cover the same price, it makes sense. It's the discounted price. It's not covering your full bill. But you have to also go to if in theory, after the 12 or 24 month period, you somehow are below the minimum, which I've never actually seen anyone truly under the minimum, then you have to request a check, because it will default to a credit versus your future. So basically, Sunrun is doing everything they can in their power to never actually write you a check, even though the whole sale is based upon the feel-good comfort of, hey, if this doesn't work, you're going to get a check. So the whole thing is not wrong, but there's nothing wrong with the way that the service is set up, because I understand why it has to be that way. The problem is if they explained how the service really works at the kitchen table, everyone would go, I don't know if this is really the best thing for me, because now I'm going to be possibly on the hook for 2 bills at once, because Edison or SDG&E or PG&E or whoever your utility company is, they're going to definitely bill you for that month once that, your system breaks.
Yeah,
So,
I hear what you're
Great
saying. And I
points.
think with the homeowners, they do often misunderstand, right? They hear performance guarantee and they think the performance of my system is guaranteed, like black and white. But it isn't black and white. To your point, it does allow for a lot of deficiencies. They do often are looking at 2-year productions at a time to account for weather differences. And so, yeah, oftentimes it's not a complete 100% guarantee. And I've also seen clients get confused between performance guarantees and panel production guarantees, which are completely different, right? The manufacturer is guaranteeing 80 to 90%, 92% production in year 25, and they also have an annual guarantee of production. So there are a couple different things here when it comes to the guarantees of your system. It is equipment performance, and it's also performance guarantees for overall system production. So 2 separate things.
Yeah, thanks for clarifying that. Yeah, I was going to say, performance versus production guarantees, that's a very important part. Julian, you made some excellent points, and I'm going to actually take it a step further, give you some anecdotes, because I have hundreds of TPO customers. And first of all, some of that is just training and education, like you said, where it's a credit that if the system underproduces, and I have had dozens and dozens of clients get that credit from a Sunrun. I know Sonova and all the top providers do that, but it's not a check, right? Now, to your point again, if they've got $30,000, $40,000, $50,000 in buffer because these are overpriced agreements, well, then a $300 credit in a 12 or 24 month period is nothing to them, right? They can do that and not even think twice. So I understand that argument. I'll give you one example further. So a lot of these TPO agreements have clauses about tree trimming. Okay. So for instance, if you're a client who gets a TPO product in a tree shaded area and it underproduces, this is what they'll do. It's more cost effective to them to just not even cut you a check, to credit your account than actually solve the problem.
Right.
And I have personal clients where this has happened to them. We guaranteed, 10,000 kilowatt hours, and it was below that 90% threshold. And now they're producing 8,000 or 7,500 kilowatt hours. And they're like, what the heck? I'm getting this huge true up bill from the utility. Can you guys come out and put on equipment? Now, logistically, let me explain for anyone who's maybe looking at buying solar or just new to solar and they don't understand the nuances of this. You can't just slap on more solar panels. You have to get re-permit, you have to get engineer plans, the utility company has to approve it. There's a lot of barriers to entry to just add a couple extra panels. So it's not as easy as it sounds, yet a lot of these salespeople will make it sound that way. Oh yeah, in the future, if you guys use more power, we'll just throw on a couple extra panels, not a big deal. And that's the way they frame it. So to your point, a lot of this is framing and miseducation. And if your system is underproducing and they're crediting you at 20 cents a kilowatt hour, but your utility is charging 40, 45 cents a kilowatt hour, that 2,000 kilowatt hour differential from what the system is not producing is going to cost you significantly more. And then you're going to have a customer who feels like they got scammed, taken advantage of. Even as somebody who I consider myself a high integrity solar salesperson in the industry, at the end of the day, there's not a whole lot I can do to actually remedy the situation in a way that the customer is going to feel happy about. And Sunrun and Sonova and these other providers are going to be totally happy with a $300 or $400 credit when the customer's paying $1,500, $2,000 to the utility company for that lack of production.
I think that if Sunrun would have, in theory, set all of their systems up like using Enphase micros before NEM3, before batteries had to become part of the equation, right? Like in theory, if they would have set them up with Enphase, right, they would have had maybe a $700 cost increase per project, but they would have had a lot more happy customers if they only have a 5% drop, in their production because one out of their 20 panels went bad. Obviously now we're in a new age where batteries are in place, so hybrid inverters seem to be the thing that most people are doing. But yeah, I think that it also goes back to the reliability of the equipment and trying to prevent problems from happening in the first place so that less service calls can happen. That's why I always ask people like, on their competitor quotes, like, well, what standoffs are they using? And, like things that aren't necessarily on the proposal, because those, smaller decisions are actually going to be a large factor in if a lot of service calls are even going to be made in the first place.
Yeah, equipment's so important. And I think all of us, we've worked with different equipment providers over the years. And it's really nice to work with a consultant that is very well versed in equipment, that knows what the trends are with that current manufacturer, that knows what the best batteries, inverters, and solar panels are, what's available in the market, what's well priced, all of that. Now we're talking about domestic content. So for anyone who might be watching this, who might be maybe a little overwhelmed by all the information, right? It's a little more high level, I think, than maybe for some like newer reps, for example. Let's bring it back to the consultation and setting the stage for a homeowner who's looking at solar. What are the pros of TPO? Just focus on the pros and the positives here, and why someone would consider that, who the ideal client is for that.
Yeah, I'm excited. We'll talk about that, and then I'm excited to get into batteries, equipment, monitoring, all that fun stuff. But yeah, so who the product is best for is generally, I always say somebody 55 plus, because usually they don't have a large tax appetite. The tax credit isn't going to be as useful in many cases, or they also shouldn't probably be taking out a large debt when they're moving into retirement. They should be reducing liabilities, reducing expenses. Again, some of the predictability and control around even the production guarantee, although we did poke holes in it, there is still some protection there. I always say if you're in your 55, 60 plus year range, you can't afford surprises. And although we poked holes in the production guarantee side of the TPO, those same exact issues happen on the ownership side every single day. And the thing is, if you have a loan from a bank and the system is down or the provider isn't monitoring your system, I've seen cases where 70-plus-year-old lady, I get a call from a friend, I show up at the house, and I'm looking at her system and her monitoring, and she doesn't even know how to use the monitoring system. The rep didn't educate her, and the system has been down for 6 months. Well, the bank is still collecting that monthly payment every month. They're not connected directly to the solar provider, and they don't have any production guarantee. So she's now stuck paying this massive bill to the utility for all the time the system wasn't producing, plus paying the bank out of her pocket. And, I've seen these stories time and time again, and it leaves the homeowner in a position where they not only had a horror story, but they have no recourse. They have nothing they can do to fight back. And they'll say, well, what can I do? Can I go report them to the licensing board? I'm like, good luck. Your contract doesn't protect you against this kind of thing. It really doesn't. And so that's what I would say if you're in that age bracket, or if you're an investor. That's probably the second biggest category. So if you're an investor and you own a bunch of properties and you're trying to do right by your renters, right? And you want to help them out, you already have a lot of liability that you're carrying as, carrying these mortgages or however you got the money. And you're not going to be able to really justify financing 5, 10, a dozen, whatever, however many properties for solar. That's adding to your total, debt that the business is carrying as an investor. So a lot of times I find that those those investors will do that for their renter, and they'll pass the savings along and the benefits of solar along, while TPO products don't actually add any hard debt to their bottom line. So it's a great for investors and people who are older and can't take the tax credit.
Yeah, very good points. I also like TPO products for investors. It's also a little bit more hands-off, because typically TPO companies will monitor and insure it, right? So they're not having to watch their app.
But tax credit is normally for owner-occupied residences, not
Correct.
always rental properties. Consult with your CPA.
Consult with your CPA. All right. And Julian, if you were to talk about pros of the purchase and who the ideal client is, and I know you touched on it a minute, but if you could elaborate.
Yes, I mean, personally, I think that unless you're essentially on Social Security or you have zero tax liability and you don't have cash and you don't foresee yourself making any financial advancements in the next few years, that is like, it's the person that's stuck in their house, can't afford to move and can't afford to stay, that needs the lease. I don't know why we advertise solar as own your power, but then when they get at your kitchen table, they demonize owning it and they demonize debt, which I thought America was all about smart debt and making smart investments. I've heard the argument that don't go into debt, just take that $40,000 and go put it in the stock market instead and let it grow at 9 or 10% every year. Well, the internal rate of return on paying cash for your solar system is probably closer to 15 or 16%, which is a superior investment. And I thought that you didn't, the whole point of offering the PPA is because you don't have the cash. If you have the cash, that's the way to go solar, because your payback period is oftentimes 6, 7, 8 years, depending upon what part of the country you're in. So my argument with who a purchase makes sense for, even if you don't have the cash, don't look at this in terms of payment. Look at this in terms of payment, and then what happens when you have to sell your house. And with a lease or a PPA, at best, all you can do is lower your cost. When you purchase, you actually are making an investment on a system that has a very, very slow depreciation. And so unlike a car where the minute you drive it off the lot, it's already worth 80, 75% the value of what it was when it was new, solar is like a 25, the panels and most of the inverters are 25-year products racking. So if you go to sell your house in 5 years, in my experience and to my research, you will see pretty much all of the value come back. And if you can take advantage of the tax credit, like if your system's 40 grand, all you need to do is reap 28 grand in the sale of your house, not to have saved money, but to have had zero cost of power for the time you were in the house. And so with a lease, you don't even ever have the opportunity to have an investment. There is no investment. You're just signing up for another utility service, which it's much trickier to get out of. So really at the end of the day, considering like the average 2 battery system is 50 to 60 grand, that comes out to be close to 40 grand net. A 1 battery system is oftentimes in the mid 30s to high 30s. That comes out to be in the mid 20s net. Just know that with a good financing plan, without a big dealer fee, your escape or your exit is never going to be more than what the net cost is and the principal of what you have left on the loan, which is not the case with a lease or PPA, because they're going to try to bully you into, transferring it or having to pay off essentially the remainder of all the payments. I know that some of these have prepayment schedules, but what they say is this is the minimum amount at the time it will be reassessed. So that is a kind of a false sense of security when they give you that pre-buyout chart, because they're saying these are not the numbers.
And if you look at that pre-buyout chart, to your point too, the buyouts for the first 5 years, it's the same dollar amount. It doesn't even decrease really. Some of the agreements will have things like, well, it's a third party assessed where they come out and they determine the system cost. I know I've used that sales pitch before, but in reality, if you're going to go TPO and you sell it as, oh, well, you can buy it out anytime after the 5th year, I'll be honest, I used to sell that way. I don't sell that way anymore, because the reality is you're going to pay basically a fee on top of it. You're going to pay way more than if you were to even finance the system. You're going to basically fulfill the contract agreement, which we've already discussed is a lot of times,
you're
2x.
You're trapped.
You're trapped. You can't get out. So the exit's not as easy as they make it sound. And when I advise people now, as I say, there's 2 options. You can either do an early buyout or a prepayment. I would never advise doing an early buyout, because you lose the production guarantee, you lose some of those protections, plus you pay a crazy inflated price. If you do a prepayment, it's a little bit better, right? You can make that argument. Obviously, it's less dollars and cents, but again, still probably going to be a lot more than if you were to just finance or buy the system outright.
When you get a loan, obviously the way that it's, I think most people understand how interest rates are calculated, right? And how there's a principal and then there's the interest that's calculated on top of the principal, right? And then on a monthly basis, you pay your monthly principal. But if you ever want to pay it off early, right, it's just the principal that you have to pay off. And I think that when most people realize that the main difference is not, it's not about, the difference is $30 a month, right? The difference is when I go to sell the house, what happens? And statistically, because most people move every 7 or 8 years, that is going to come up before that term is up, whether you're financing for 20 years or doing a 25-year PPA, right? And so I have someone call me every few days from somewhere around the country, and they're like, hey, my house just fell out of escrow, basically because the buyers didn't want to take over my PPA, so considering that UCC1 filing does have a dollar amount associated with it, or a reassessed fair market value buyout, which isn't, you're not buying the equipment, you're buying service. So that's how they manipulate the value of it, right? So in that case, it just does not leave the sellers of that house, or the original purchasers of the system, with as much freedom or opportunity to even leave with zero cost. Because in theory, if you get your tax credit back, your real cost is only 70%. And if you truly believe that the system doesn't make the house go up 70% of what it costs to really even get the system installed, then I think we all need to question like what we are selling.
I think there's variables in every market, every state, every utility. The cost of the utility can have an influence. You do a lot of business in San Diego. It's one of the highest cost utilities in the country.
That's true. Mostly talking about California with
the highest home prices. So if we go to Tennessee or Nevada or Idaho or Utah and we have a $300,000, $250,000 house,
right?
Then I don't know if it's going to carry 70% of its $60,000 system price.
Yeah, that's exactly the case.
I do agree.
I have family members in Ohio who've bought solar, and I've asked them, I said, hey, did you get any assessed value? And a lot of these other markets aren't as mature, and they don't have any type of a structure in place to capture that value when they're assessing the property value. So in California, where it's one of the most mature markets, yeah, they have ways to recapture that value.
And it's still a challenge, for real estate appraisers out there.
Right.
A lot of appraisers don't want to give it its value. They'd rather not even ask or
They don't even want to know about it.
Because the industry is just, to be honest, it's not that mature, and the education for appraisers and value is there. So if you are selling your home, make sure to talk to your appraiser and get that value added.
I personally think that, I don't know what you guys think about this, but I feel like just having grid-tied solar, sometimes the value, if they don't understand the savings that go with that system, sometimes it is harder to kind of understand. But personally, I feel like having full backup batteries, where basically, you can say, hey, when you buy this house, like if the grid fails, you have your own mini grid or microgrid, right? I think that comes with a little bit more of a cool factor.
Right, blackout protection.
Right,
let's get into that, Julian.
Yeah.
So batteries are very big in California, Hawaii, and we're going to likely see the trend over the next 5-7 years, big time in batteries. And we're seeing Tesla Powerwall 3s fly off the charts right now. So I've heard that often the manufacturer's warranty when you purchase is 10 years. And likely they guarantee 60 or 70% efficiency. Whereas the lease TPOs, the proponents there would say there is a battery replacement under 25 years if it dips below the manufacturer's guidelines for all 25 years. So, and oftentimes I'll hear lease TPO providers say, well, you don't want to go buy a 10, 15 grand battery in year 11 or 12, do you? So let's talk about batteries and purchase versus lease. Who wants to start?
Yeah, I'll kick it off. Yeah, so let's touch monitoring for just a quick second because we haven't really got into it a lot, but I will say this. I'll argue against myself for just a second. So with TPO, a lot of times they give you very minimal kind of an application that sits on top of the actual manufacturer's monitoring system where it gives you kind of vague, blurry data to keep it ambiguous so they can kind of hide their production guarantees within that. So I'll kind of make your point for you there.
Per panel, but just a broad number.
Yeah, so that's a thing too that's honestly could be cleaned up on the TPO side. But I agree with the value add with batteries and what we're transitioning to right now. I think the value perception to the client, to the home buyer is much higher. And we don't have evidence really to prove that yet. But I will say, yeah, with TPO, that's the selling point right now. Battery replacements included for the 25 years. And then you can justify, well, if it's 10, 15, 20 grand in hard cost to replace these batteries, then does it really make sense to own the system because you're going to have to come out of pocket again in the future? That's still to be determined. Let me give you my take on this. This is just my own kind of unique perspective on this. So I've never heard anyone talk about this. You heard it here first. But basically what's going to happen, I think, is that companies like Tesla are pioneering the way with these DC expansion packs. So what I think is going to happen is these TPO providers, they're not going to replace the battery if it's still functioning at 67% efficiency in 10, 12 years from now. They're just going to add a secondary expansion pack, and that's going to keep the cost down, the install cost down. They're obviously going to still retain the value of the original battery that's still going to store some power and give it a boost. Now, that hasn't happened yet. It hasn't been proven yet. I literally just came up with that, so I'm making that up. But I think that's what's going to happen. I don't think they're going to replace it. It just doesn't make sense from an economic standpoint for these companies to shell out all that money. And honestly, on the consumer side, again, probably another fear-mongering tactic from TPO providers that you probably don't need to replace these batteries in 10, 12 years. We don't know yet, but most likely you'll need an expansion pack. So those are my thoughts on batteries.
All right, yeah, and I also wanted to throw in there that, for a minute, a lot of these markets were also offering non-backup batteries as well as a way to save costs, and now we're kind of getting away from that. So there's a little bit of that in the mix. So what can you say about batteries and thinking non-backup and backup as well?
All right. Well, first off, just with the monitoring thing really fast, I think that a lot of times Sunrun or whoever the lease provider is, they're not very quick to catch that the system is having an issue. With a purchase system, obviously it comes down to the company. Like if the company doesn't go through at the end and explain how to use the app and everything and how to log in and like look at your panels, like obviously the customer's in the dark. But I personally believe that it's better to train the customer on how to look at their app and tell them to basically look at it once a month, because you don't want to rely, even if you're doing a PPA, like you don't want to rely on Sunrun to call you, because there's not much in it for them. It costs more money to fix than what they're going to have to refund you, right? So it's not a money-making activity. It's a money-losing activity to service your warranty. So with that being said, I think that in general, it's good to just make sure that you understand your monitoring from day one and not expect any company, whether you're purchasing it or leasing it, to call you to tell you that there's an issue. When it comes to batteries, I think that the battery replacement issue is there's a lot of gray area and unknown that even for someone like me that is supposed to be an expert on this, even I have not been able to receive clear answers from companies like Sonova or Everbright, which I've asked the reps personally, like, how is this going to work? So my big question, maybe you guys can help me. So you have the natural battery degradation. So let's say the Tesla Powerwall is 70% at year 10, right? And then they'll say, like Sonova will say, well, like we're not really stepping in until after the 10 year. We're going to rely on Tesla for the first 10 years. So really it's just, they're going to register your warranty claim for you, which is the same exact thing as if you bought it, right? Same warranty. But then after that, when Sonova says, well, if the battery dips below the degradation, like, then we're going to replace it. Well, okay, first off, Tesla, there is no guaranteed degradation after 10 years. So like how is Sonova or Sunrun or Everbright really going to calculate that, because it's past the manufacturer's warranty period? And then two, like, let's say in theory, they're like, oh, well, it's just continued at the 3% degradation every year that it's been degrading at. It's still functioning properly. Well, at what point in time do they come and say, oh, well, that battery doesn't have the capacity of what we're guaranteeing? I've never seen in the contracts the guaranteed capacity of what the battery will be able to hold. So like in theory, I love the idea of, hey, you bought a service, the service includes storage, you're going to get replacement of storage. The problem is, like, I haven't ever seen it written out or explained to me, like, what qualifies you officially to even really get the battery. And then there's also the problem of, like, if you've done the lease, you're going to only be able to really get the battery, I assume, that Sonova or Everbright wants to install, versus like a lot of people, like especially ones that like they just bought the house, it was an existing system, now they're upgrading it. Well, that new homeowner or even the existing homeowner, like they have a new set of ideas about what they want to do. Maybe they want a new battery system that's a different brand, or they want a bigger battery, or like you can't really alter the system of a PPA. I know that some of I know that some of the providers are trying to change that and make it easier, but historically, it's been a big issue because if you have a PPA, it's locked in and you can't alter it. You have to come and add a separate system, or you can't add a battery to that. That's a leased system. And so it locks you in, even though it's framed around, oh, you're going to get this free battery. There's like 9 other problems with it where you don't have the freedom as the homeowner to do with the system what you want.
I'll say that you should read the fine print of any lease TPO provider, whatever one you're looking at, and have your sales rep show you in the contract that exact detail like you were mentioning, Julian.
Mm-hmm.
I happen to have investigated the Sonova contract in detail and confirmed with the account manager. They do look at the manufacturer's warranty. So if it is 10 years and 70% with Tesla, when it dips below that, they then repair or replace. And like you said, it could be refurbished. Likely it's the same brand.
Mm-hmm.
And then they extend that for the length of the agreement, which is 25 years. So for Sonova specifically, on the lease storage product in California, need to stipulate that. It is, if it dips below manufacturer's warranty at any point in the 25-year agreement, a repair or replacement, doesn't have to be brand new, will be performed by Sonova is what they contractually say.
I think that you bring up a really, really good point too for homeowners out there that might be shopping around. Anything that your consultant is saying and that you're hearing should be in writing. And so you really want to ask them to reference, like, where does it say that, right? Whether we're talking about like warranty, performance guarantees, any of these things, they're all going to be in writing.
Yeah, let me add something to that. So great points, all valid points. And we actually don't know how these new lithium iron phosphate chemistries perform long term. There's actually a lot of good evidence to show that they're going to perform 15 plus years. And so if it doesn't drop below that 70% guarantee, it may be 15, 20 years before they even have to, by contract, come out of pocket again. And I think that's what they're banking on as the finance providers. That's my take on that. Let's touch on
a lot of those systems have solar edge batteries,
right.
Unfortunately.
Right, they do.
Which are the NMC chemistry.
Okay, yeah, fair enough. Yeah, so they're different chemistries. Yeah, that's pretty in the weeds. We get into the chemistries of that. But I want to touch on this. I think this is more consumer level stuff. So I want to touch on, I don't know if this is a prompt, but I'm going to bring it up. Let's talk about VPPs and rebates and incentives for batteries coming out. So this is something that's really important to think about too. And this is probably the biggest problem I'm currently thinking about as a solar expert at this moment in time is how do we know what benefits go to who? So as an example with TPO products, obviously the federal tax credits, any state incentives, a lot of times that gets signed over to the TPO provider. The homeowner, indirectly could benefit by just, again, getting the cheaper power rates potentially.
Can I clarify that real quick, too? Yeah. So what Jonathan's referring to, virtual power plant, community-based programs, certain states have SRECs. In Illinois, there's a SHINE certification you can do. There is battery rebates right now. And they vary from utility to geography to possibly income, fire zones. There's a lot of variables. And now we're throwing domestic content into the mix as well. So a lot of money on the table. And the TPO provider can capture that and generally pass it on.
Yeah, that's a good point. Yeah, so solar renewable energy credits are big in the the northeast part of the country. Tax credits, incentives, and now in California they have these new virtual power plant programs, and you're seeing interesting things where companies like Tesla, within their Tesla app, have the ability for homeowners to opt into these VPP programs and credit the customers. And I'm not even 100% sure of how the money is transferred, but they're actually crediting the customers at a lower rate than the customer could sell back that power to the utility in that same time interval. So there's some weird things happening where big companies are taking advantage of the ignorance of the consumer and skimming off the top from the benefits coming from a state, federal, local level. And this is something that's really concerning to me, again, as a solar professional, because again, we see a lot of, undereducated or even just miseducated sales reps and organizations coming out and again, taking advantage of people's people's ignorance from the sales side and the consumer side. So as a seller, it's your responsibility, I think, to get educated on these things, to ask these questions. And yeah, it takes a lot more time and energy, and it's going to actually require that you know, as we say, not just be a solar bro, but be a solar pro and use a couple brain cells. But basically, that's the question we have to deal with right now is who's getting these benefits. I'll tell you right now, from a lot of the big TPO providers, it appears that they're taking those benefits. So on top of taking the extra 10% domestic content on the tax credit side, they're also taking off the top from these virtual power plant programs. And again, it's filling the pockets of these big, you know, executive, CEO, high-level companies who are making these decisions at the top level. But as somebody who's supposed to advocate for the consumer and educate the consumer, I think it's our responsibility to, you know, understand where the money goes. And then if it does go to the consumer, how does it all work?
Yeah, really important point too. If you are a homeowner, to ask your solar consultant, what are the incentives in my area? Make sure they're knowledgeable about that. You can probably also do your research on that as well.
Thank you. We're kind of moving into the home stretch here.
Yeah.
Any more topics that we wanted to touch on?
I think just one last thing from both of you. Why should a homeowner choose you when it comes to helping them with their solar system?
Ooh, good one.
Cool. Yeah. So anyone watching, you can find me at Jonathan Charles Wilson on Instagram, Facebook, LinkedIn, any social media handle. It's just my full name. Again, Jonathan Charles Wilson. I'll drop my number, 909-912-2165. You can reach out to me directly. So I do serve homeowners directly at this point in my career, 12 years in. I don't sell a lot of solar these days. My main focus is on team building and recruiting. That's going to be my focus over the next 2 to 3 years, building some of the top teams in the nation, educating sellers so they can then pass that information on to their customers, their referral partners, things of that nature. So if you are a team builder or you're somebody who maybe is in solar and you want to really get education from somebody who I consider myself to be one of the more educated people in the space, we have a great opportunity with you. We try to provide, amazing resources to give you all the tools that you need to not just go out and sell the job, but to sell the job with confidence that the homeowner is getting exactly what you promised. So, that's how you can find me.
Love
Awesome.
that. And Julian?
Well, I think that at the end of the day, as if you have gotten to this point in the video, where how far are we in, by the way?
Probably an hour and a half or so.
Hour and a half. If you've gotten an hour and a half into this video, I really do thank you for watching it this far. All of my contact info is right below. You can even fill out the form that's linked right there, and we can call you back right after you fill out the form and start your project. I do service 30 states actually. So I have about 15 guys throughout the country that I think are local experts. And so I found out a few years ago when I built my business up that each market is so unique that you're going to do a lot of harm if you pretend like you're just an expert in every single market. I know Southern California like the back of my hand, but you start getting into some of like these SREC programs like on the East Coast, and it's like a whole new set of information. So, just making sure that, I had that right person or that right knowledge, that can do those projects correctly and help people get all the rebates. So anyways, you can call me 760-473-5878. And I have a website, juliansolarguide.com, with a bunch of blog articles that I've written and explanations of all this different stuff.
Awesome. Thank you, Julian. And Jonathan, how can we get a hold of you?
You can find me on all social media platforms, Instagram, LinkedIn, YouTube, Facebook, at John Brunasso. We do build teams and help homeowners in over 25, 30 states, and we do offer cash, lease, loan, purchase options, and we'll make sure to educate you properly as you're on your solar journey and get lots of quotes. Feel free to find me online, and cell phone number is 909-964-9632.
Awesome.
Cynthia.
And my name is Cynthia Alvidrez, and you can find me on Instagram at solarwithcynthia, or you can email me at solarwithcynthia@gmail.com. And both of these gentlemen made really great points today. Thank you guys for this little debate. It was definitely fun. So many pros. of both going with either a TPO product or a purchase, but the only right decision is just going solar. And if you're on the fence and you really don't know which way to go, you can reach out to any of us to have a solar consultation with us. And we look forward to the next one. Thank you, gentlemen.
Thank you.
Thank you, guys.